Hey, what's going on, everybody? Hey, welcome back to another video lesson. All right, so in this video lesson, we're going to talk about how to trade debit vertical spreads by using the TTM Squeeze, right? So, hey, if you're looking to trade debit vertical spreads, if you like the squeeze, this video is for you. Hey, do me a favor. If that sounds good, hey, give me a thumbs up on the video. It doesn't cost you anything, and it helps support the channel. Also, if you enjoyed this type of content, hey, make sure to subscribe to the channel and hit that little bell, right? Hit that little bell to be notified whenever I go live or shoot a brand new video, okay? And then stick around at the end because I'm going to share with you a link on how you can get my new book, Trading Part-Time, completely for free. All right, let's go ahead and jump into today's video lesson. All right, everybody, so we're talking now about how to trade squeeze plays. How to trade squeeze plays. You can buy a long call. You can buy a debit vertical spread, or you can sell a debit vertical spread. So what we're going to do in this example is we're going to look at buying a debit vertical spread, a bull call spread. We're going to look at this example because the chart that we're looking at is in an uptrend. It's consolidating under a high, and we've got a squeeze. So when it's an uptrend consolidating under a high, we want to be a buyer of a call or a seller of a put. Bottom line is we want to trade up. So we trade the strategy that takes advantage of bullish setup. And in this video lesson, we're going to talk about buying a debit vertical spread. So what we're doing is we're looking at 𝗕𝗢𝗡𝗨𝗦. So if we look at 𝗕𝗢𝗡 here, we've got a beautiful uptrend consolidating under a high. Everything matches up, okay? We've got the C wave, the B wave, which is up. We've got the C wave, which is up. Yes, the A wave momentum is down, but it lags price. Price is already picking up. If I go over here to the weekly squeeze is fired to the upside, so we still have bullish momentum. This is the C wave, but the weekly C wave, it's up, which means the long-term momentum is up. This is the B wave up. So I've got the B wave up, the C wave up on the weekly, the B wave up, the C wave up on the daily. This is why I want to trade bullishly. So if we look at 𝗕𝗢𝗡𝗨𝗦, okay, we're looking at 𝗕𝗢𝗡 here, and yeah, it's got some decent volume for right now. The market's only been open for about an hour and a half, and I've got the option in the open interest and the volume pulled up, and you can see here there's not really much happening over here. What that's telling me as a trader is, yeah, the volume is pretty abysmal over here on the put side, so more people are on the long side, right? That's what I just visually looking at it. So then if we're trying to choose a strike, then I like this one. The open interest is 288, volume is 11. So, and again, we have another video that talks about that specifically, so make sure you watch it. But this is the strike that most people are at. So if I look at 𝗕𝗢𝗡, it's a very expensive stock. I mean, just a minute ago I was looking at this, it was $6.90. It's already went up 50 cents. Okay, so it's $7.40. So if I was going to try to buy a call, which we're not going to, I would try to pick it up on the mid, about $7.20. But that's $720. Okay, so some of you watching this video lesson right now might be telling me, "Dan, that's too expensive. I can't afford to put $720. So what do we do? Well, since all my market variables are adding up, I'm going to use this time to buy a debit vertical spread. Why am I going to buy a debit vertical spread? Because I'm bullish, and a debit vertical spread takes advantage of bullish movement. But with a debit vertical spread, the only thing that has to happen is the stock needs to stay above the strike that I sell. If I buy a call, it's got to go straight up like a rocket ship. It better fire, because if it stays in that squeeze for a long period of time, I could be in trouble. With the debit vertical spread, it's a little bit more forgiving. I said a little bit. We still want it to go up. But here's how we do it. We take this first strike out of the money. Okay, out of the money is going to be the 210. The 210 is the first strike that's above the 202. Now, it's also on Thinkorswim platform. It's not shaded. So here's what I'm going to do. I'm going to right-click, and I'm going to buy vertical. Okay? Now, I need to make a couple adjustments. So this might be a little bit confusing, so go back and watch this video recording over and over again. Now, I bought a vertical at the 210. Now, I need to make some adjustments down here. Okay? So, what we're doing is we're actually selling this strike. So the debit vertical, we are going to sell the first strike out of the money, and we're going to buy the first strike in the money. Let me repeat. We're going to sell the first strike out of the money, and we're going to buy the first strike in the money. So if I was to, let's say the stock right now is $202. So let's say 𝗕𝗢𝗡 is $202. That is the current price. Now, it's going to change on us, but that's okay. We're going to leave it like that. If I sell the 210, now, remember, going back to our video lessons, we talked about the strike price. This is a $10 wide strike. $10 wide is a lot. I would prefer $1 wide, $2.50, $5. But when it gets to $10, it's a stretch. Okay, it doesn't mean you can't do it, but it's a stretch. Go back to one of our training videos to talk about it. But here we go. So what I'm going to do is I'm going to sell that first strike out of the money, and I'm going to buy that first strike in the money. Okay? First strike in the money. So it's going to look like this. So what I'm going to do is I'm going to sell the 210 call, and what I'm going to do is I'm going to buy the 200 call. Okay? So again, when in doubt, all you need to know is you're selling that first strike out of the money, and you're buying the first strike in the money, but visually, this is what it looks like. I'm selling the 210 call, and I'm buying. Now, in order for me to achieve maximum gain, the only thing that has to happen is, so let's say we're right here at 202. It can go like this, like this. All that has to happen is the stock, by expiration in the next 45 days, needs to close above 210. So if in the next 45 days this stock finishes above 210, I will achieve 100% maximum gain. If I buy this 210 call, first of all, it's got to get up to the 210 just to be in the money. Okay, and time decay is going to be brutal. So that's kind of what I'm doing. This is exactly how we set it up. But the next thing when it comes to this is we need to make sure that the market maker gives us what we need to get. And when I do a debit vertical spread, I will not take anything less than a 1-to-1 reward risk ratio. All right, everybody, I hope you're enjoying today's video so far. Hey, do me a favor, if you are, and you haven't done so yet, give me a thumbs up on the video. I really appreciate it. It doesn't cost you anything. It helps support the channel. Hey, and make a nice comment if you are enjoying today's video. All right, so let's go ahead and get back into the video lesson. Nothing less, no matter what. Which means if it costs me $2.50 to buy this spread, I will not buy it unless my reward is at least $2.50 as well. It has to be 1-to-1, no matter what. So let's see if we can get it. So I'm going to start over. Let's go buy vertical. Now this is where I got to switch. Whenever it shows the minus sign is selling. So I'm going to sell the 210. So I need to make this adjustment. 210. Now I'm selling the 210, and I need to buy the 200. So I need to go here and go buy. Okay. Now, this is a $10 wide strike. Again, not ideal. But the strike is $10. The debit is going to cost me $4.90. That's the mid. The natural is $5.40. What that is saying is, more than likely, the market maker will fill you here, but he's not necessarily likely to fill you here. So, remember, if I'm looking for a 1-to-1, here's a question. If I go here to $5, that's the most I'm willing to pay, okay, which it shows you right here. If the strike is $10 wide and my debit is $5, $5 is half of 10, which means my reward to risk is going to be 1-to-1. It's going to be half. You just take the spread and look at the debit. And an easy way is, when I hit confirm, just read the numbers. Maximum profit, $500. Maximum loss, $500. 1-to-1. If I could get $5, this is something that I might be willing to trade. Okay? But again, these $10 strikes are not really doing it for me. But again, here's the deal. If I buy one call option, it's going to cost me over $700. If I do this vertical spread, it's going to cost me $500. So it's not as much, okay? Not as much. And it is a 1-to-1. So if I go back and I look at this, I like what's happening. This is a perfect area to buy all the internals. If I'm willing to risk $1,000, then I'm going to buy two here, 1,000, maximum profit 1,000. So if I hit my win, it's 100%. Let's see if, oh, we got filled. Welcome to paper money. We probably would not have got filled in real life, but there you go. I resetted my paper money account. Everybody, I reset this because I want to start over fresh. So all these are now zero. Zero profit, zero loss. So if you notice, I just bought a vertical spread. Now, I'm already down $25. Why am I down $25? I mean, I just bought it. And now I'm already down $30. The reason why is the spread. Okay? The spread. This is a pretty big spread. So this is why you got to be careful when you're buying. It doesn't matter what you're buying, spreads or calls. The spread, you're going to immediately be down on this trade. Now, I'm okay with that because what I need to see happen is by expiration, which is within 45 days, as long as Paycom goes to 210. And when you look at it on the chart, guys, look at this. Edit 210. And let's just make this green because that's our money. Money, money, money. Let me shrink this. Boop. Look at that. All it's got to do is go up. It doesn't even have to make a new high. Okay? It's just got to go up here and get above it. Now, if it makes a new high, even better. But if I buy a call, I mean, it's going to have to giddy up and go. What if we stay in this squeeze for like several weeks? Time decay would be eating me alive. So that's another option, guys, is you can do a debit vertical spread. And once again, for training purposes on the debit vertical spread, I look for debit vertical spreads when things are out of line. And what do I mean by that? If this C wave is above zero, but this B wave is below zero, that's conflicting messages. The intermediate momentum's down, but the long-term momentum's up. Not 100% sure on that. Or if the weekly momentum is down, even though the daily momentum's up, the weekly momentum's down, that's potentially a flag. Okay? Doesn't mean I don't want to trade it because I'm trading the daily chart, not the weekly, but that's a flag, right? So that's a time where I would look to do a spread. But why am I buying a spread instead of selling the spread in this case? The reason why I'm buying is I want to be a buyer because all of my internals are telling me that this is going to fire to the upside. I want to be a buyer. And I bought a debit vertical spread because this stock is too dang expensive. So when a stock is too expensive, another option is buy vertical spread. How do you do it? You sell the first strike out of the money. You buy the first strike in the money. You're looking for a 1-to-1 reward-risk ratio. And all that has to happen is by expiration, it close above 210. All right, everybody. Hopefully you enjoyed today's video lesson. And if you did enjoy the lesson, do me a favor. Hit the like button below, share it with your friends, and subscribe to the channel. Oh, and by the way, check down below in the description. There's a link on how you can get my latest book, Trading Part-Time, completely for free. Don't forget to take a look at my next video coming up right there. We know you'll enjoy it. All right, everybody. We'll see you in the next video lesson.